It's Tuesday, October 4. Market's closing in about 10 minutes. Wanted to update the short-term story and add a little to it that we hadn't discussed before. So far, the last week's prediction was, right. Market did exactly what we wanted. Came down into the second, third was the Monday, and had a huge update on Monday and another huge update on Tuesday the 4th, and it looks like the collapse, that was could have been happening, didn't. And I think this is what we anticipated. We expect to see basically consolidation with an upward bias into November 7th, and probably another low later in the month of October between the 17th and the 21st. Is that low lower? It's possible, but it's also possible that the basic trend here is going to be up until between the 10th and the 13th. And it had these two huge up days, and you'd expect either one of them to correct. It may not correct. It may just do some nasty sharp-edged rally until maybe the rest of the week, until the 7th anyway, and then maybe slowly go higher until the 10th or potentially even the 13th, come down into the 20th, between the 17th and the 21st, and then go up into the November 7th, which, by the way, is around the election. So it's not an accident. It's also interesting how many of you already know that it came down to the 200-week moving average, which is kind of a make-it-break-it point, at least psychologically, and it held, and it shot off there as if it maybe want to go somewhere. Now, what's interesting is we've been bearish, and we continue to be bearish until late November, potentially even December. But I ran some correlations over the data that we've got the last 12 months and found that using the last 11 months, 12 months of data, the best matches in the last 120 years are listed, from the most highest correlation down to the lowest, and I only consider correlations above 70%. It turns out the top 8, all 8 of the best fits are bullish. They're bullish from either here or middle of November or maybe a little bit later in December. There are variations on how the market moves, but it was very interesting to see how it's unusual to see 8 in a row. Usually you get 3 of them are bullish, 3 of them are bearish, This particular situation sparks in my mind the fact that number one, we thought there was something holding the market up. We've been saying this for weeks, that we didn't expect a major crash, that we're thinking 3,400 would be the potential downside, at least this year, before going up into February. Many of the patterns go up beyond February, March, even May of next year. So there could be something of a bullish move coming into the election, interestingly enough. You wonder if that's somehow contrived. It doesn't matter what, the cycles are supporting it. And there's also a probability of a pretty decent move at the end of the year into Christmas and possibly into early January. So I'm not super bearish, even though we probably will have at least one retest or new low in October and likely new low in November. These are not necessarily huge downtrending moves. I think what we're going to see is a couple of sharp-edged breaks after the market holds up until November 7th. And they'll complete some sort of a shakeout mode before rallying a few more months into next year. So I'm somewhat bullish, and I want you to see the composite wave in this chart that you have here that show number one, the top 8 matches are very, very good, and they're all bullish. And that the summation of them is also quite bullish, and it goes on for a number of months. So we're near some sort of a decent sized low. And all the bearishness somehow is going to shift into a different tone. Notice gold has shot up exactly in line with the S&P. The bonds have shot up exactly in line with the S&P. So there's going to be some shifting that's going on now, potentially in the US dollar falling, although not dramatically. But nevertheless, that shift is happening now. There are a couple of retests and possible new lows over the next month and a half, 2 months. But I think the bottom's going to hold and the market's going to show some strength. There are targets above around 4,200 and potentially even as high as 4,400 before everything is said and done. And then we still expect next year we'll see continued bear market action. But it's a longer-term bear market. It's not immediate. It's not a crash. And it's something that if you're intelligent about your stock picking, you should be able to make some money on the long side between now and March of next year. By the way, do some thumbs up. We love them.